Hey guys, thanks for jumping back into the cryptoverse. Today we are going to be talking about the coronavirus and the rate at which it's growing since it's making headlines around the world. We're going to be looking at that. We're also going to be looking at Bitcoin, the S&P 500, and gold, and looking at any correlations between them at the macro scale. So if you guys like this content, please subscribe to the channel and turn your notifications on. So first off, let's start with, and I should mention my external webcam is broken, which is why it's a lot blurrier than normal. But first, we're going to start with looking at the number of coronavirus cases on the y-axis in China versus time. So you can see it was increasing quite rapidly, and then we started to see it level off, and then we had this jump. And this gap here is just, it's an artificial gap because it's just the way in which the numbers were being counted, the way that people were being identified as having the coronavirus was changed. And so this led to this jump here. And then you can see it started to level off again. Now, if we add on here the number of cases everywhere else, you can see it's pretty much dwarfed by the number of cases in China. And if we add them, well, first let's plot them on a log scale so you can see their growth relative to one another, and you can see that the number of total cases outside of China is only a few thousand. It's not really that much, whereas in China, it's getting close to 100,000. So if we were to sum these up, the total would just be the yellow curve, which is essentially the same as the ones just in China, because the difference between this and this, between China and everywhere else is very small. So you can see that it's growing. It's grown from about, when we first started tracking it here, it's grown from a few hundred up to almost 100,000. But again, you can see that it is leveling off. However, this has not stopped. There's still obviously a lot of concern because it's pretty much an unknown virus. We're not even sure about a lot of the things behind the virus. And because of this, it is affecting markets worldwide. It's affecting basically any market, most of the markets, but it's especially affecting, say, like travel agencies and stuff like that, because people just aren't wanting to travel. And I should note that, because we can see that it's slowing down, we can try to mathematically investigate a way that we can understand the level at which it's slowing down. So we can look at the time it takes to double. So the time it takes for the number of cases to double is increasing, because this is in days. So the y-axis is in days, and this is time. So on January 20th, the time to double was 3 days, and you can see it got as low as 1 day in late January. And then it was more or less between, say, 1 to 3 days for that last week of January. It started increasing up to 4 days, 6 days, 8 to 10 days. And currently it's taken about 16 days. And this is if you had measured it, maybe February 7th or 8th. And then looking at cases that happened beyond that, we don't have doubling time data because it hasn't doubled since then. Because if you look at the number of cases that were on, say, February 7th or so, it was around 40,000, 45, something like that, 50,000. But we clearly haven't gotten to 100,000 cases. So I'm sure that we will at some point, and then we'll see that the doubling time is continuing to increase. Now, obviously, there still is cause for concern because, when the outbreak first started in China, it did start, it started at fairly low numbers, but it really picked up to where we were going up by several thousand cases a day. And recently there's been outbreaks in Italy and South Korea, and there's concerns for outbreaks other places. So, of course, this is causing a lot of people to be fearful of the markets, because a lot of companies aren't going to be doing as great this quarter because of all the shutdowns and because a lot of cities are being shut down. There's a lot of restrictions placed in countries all over the world. And so this is affecting markets. So we want to know, this channel is about cryptocurrency. So how does this potentially affect cryptocurrency? Because, Bitcoin was created out of the recession of 2008. And because it was created out of the recession, it hasn't actually experienced a recession since then. And so there's a lot of unknowns with Bitcoin in terms of that. And there's arguments that say, there's two main arguments. One argument is Bitcoin is a store of value, it's digital gold. And gold tends to do really well when say like the S&P, when the markets are doing poor. Like if the Dow Jones is going down and it's in a downtrend for a long time, then a lot of people are historically moving their money to gold. Now Bitcoin obviously wants to be digital gold. So the question is, in an economic downturn or recession, how would Bitcoin behave? Now, clearly, we're not saying that this is, that the coronavirus is definitively going to lead to a recession. It might not lead to much of anything at all, except a short-term pullback, especially if the world can really get a handle on its spread. And it looks like China, according to this recent data, it looks like they're really starting to contain it. And I think a lot of that can be attributed to the fact that movement within the city has been almost completely halted. So because of that, the number of cases hasn't really been spreading as quickly. Now, one caveat that I have heard is that, the number of cases that China has reported so far, obviously it's not going to account for every single person out there that has it, because a lot of people just don't have the means to get tested, or, the knowledge to know that how people that people have it might just not be there yet, because we're still trying to learn more about this virus. So, these I would say are conservative numbers. I'm sure if we were to know exactly the number of people in the world that have it, I would guess it'd be over 100,000. But going with the data, it looks like, at least in China, that it's leveled off. Now, everywhere else, you can see it's really increasing, and it's going to be up to those countries, I would say, as to whether they can keep that virus contained as much as possible. And if they do, then that would likely, lead to really halting the movement in those cities or in those towns, in those neighborhoods where the outbreaks are occurring. So the World Health Organization has not declared this a pandemic yet. That doesn't mean it can't get there. So just keep that in mind and try to evaluate how that could affect the markets. So, for instance, if we were to look at some of the news that has been coming out, I mean, even San Francisco, which I don't even think a single case has been reported in San Francisco, they've already declared a state of emergency. They're saying that the spread of it in the U.S. appears inevitable. People are canceling their trips over the coronavirus. Some people were even speculating that Japan might cancel the Olympics, but Japan said no, it's still on, and obviously we know that there was recent outbreaks in Italy and South Korea. So it'll be interesting to see if we can really keep this contained, which obviously we're hoping for. So let's move into the market. So historically, how does Bitcoin compare to the markets? So first, we have the S&P 500, and this is on a log scale. So we're going from 10 to the minus 2 up to 10 to the 5. Now, you might be wondering why I'm plotting it way down here. Well, that's because we're going to add Bitcoin onto this. So first, let's add gold. So one of the interesting things about gold is you can see that when the S&P in general is moving sideways or really not doing a whole lot or even going down, that's when gold is really performing well. So you can see back in the 70s, you can see that the S&P saw a pretty significant pullback, and during that time, gold was seeing incredible gains. And then again, when the S&P was just moving sideways, gold was going up. Then when the S&P started moving up, gold started moving down. I mean, you can see that as this is going up, gold is going down. And then as the S&P went down, gold started going up. And gold didn't stop going up until the S&P reached its previous all-time high, more or less. And that is when, or once it exceeded its all-time high, that is when gold started going down again. Now, in recent days, again, gold has started going up. And I think I think some people are speculating that the markets are, they're fragile right now because of the economic growth that we've seen over the last decade, and they're also fragile given the uncertainty with the coronavirus. So, I think that is, I think this is pretty informative to say, okay, well, it looks like when the S&P is moving sideways or going down, then gold is responding fairly well. And this is not news. I mean, most people in the world are aware of this correlation. Now, if we were to plot the price of Bitcoin, this is quite informative to see on the same scale as the S&P and gold what Bitcoin has done in such a short period of time. I mean, we're plotting it from 2010 to current day, and it's quite incredible. It's almost like a straight line compared to the history of gold and the S&P. So let's zoom in a little bit, just from say 2010. And you can see more so what Bitcoin has done. We've had the bull market, the bear market, another bull, another bear, another bull, another bear. And we're hoping, at least if you prescribe to the theory on my channel, that we're going to see another bull market, but it's going to take longer than previous bull markets because the cycles are hypothetically lengthening. Now, I like to joke that, I've joked before about how, Bitcoin held the price of gold as resistance at one point, and then it held the S&P as support. These are just jokes, but you can see more or less how much Bitcoin has outperformed gold and the S&P since inception. Obviously, that's no secret either. Now, if we wanted to say look at this and look to see exactly how these prices are correlated, we could plot the price of gold versus the price of the S&P. And we're going to do that here. So the color corresponds to the time. So 76 would be 1976, 1982. So dark blue is moving from, the late 60s up to present day for dark red. So what you can see is gold is on the x-axis and the S&P is on the y-axis. So try to wrap your head around, this type of scale. It's not against time. When gold is moving up, the S&P is not, because you can see that as gold is moving up, we're not really moving up in the y-axis. So gold moving up, S&P is not doing anything. But at some point, when the S&P does move up, you can see that we're not moving to the right on the x-axis, which means that the price of gold as the S&P is going higher is either decreasing or staying the same. Then when gold starts moving again from 400 to several, or say like 1200, 1400, you can see that the S&P isn't really going up once gold is making its move again. I mean, there is some, obviously it's going up some and then it's decreasing, but you can see that really when gold is making its move, the S&P is really not doing a whole lot. Again, the last decade, the S&P has been doing quite well and it's been moving up, but gold has really just been, basically stagnant. I mean, it's not been entirely stagnant, but compared to what the S&P has been doing, gold has really not seen that same level of return. So now you can see that recently gold is starting to move up again. And the question is, are we going to see another break outwards where gold, goes on a long or a decent run, and the S&P is either going down or staying the same? Now, I don't think it's clear yet, but that is something that we will be watching out for. Another thing is, each of these points corresponds to 1 month. So the number of months where the S&P is going up and gold isn't doing a lot obviously far outweighs that for gold when gold is moving up, because you can see when gold is moving up, it's much more sporadic than it is for the S&P. When it's moving up, the points are a lot denser. They're more closely clustered together. So let's go ahead and plot this on a log scale. So first we're going to plot it on a log scale for the S&P, and it becomes clear. You can see that as gold is moving sideways, S&P, it is doing something, but relative to gold, it's not quite as impressive. And then this really nice move with the S&P from $100 up to over $1,000 during that time. The price of gold was it was just oscillating back and forth. So this is just left and right is the gold price. So it's not really doing much. And then again here you can see this breakout and then oscillating again. So it begs the question, when are we going to see another breakout in gold? And the S&P kind of remains stagnant for a little bit, or either go down or remain stagnant. So here we have both the S&P 500 and gold on log scales. And it's the same story. So you can, I think this is the easiest one to see the pattern on. So gold moves up, S&P moves up, gold moves up, S&P moves up. Now let's continue moving forward because a lot of people care about cryptocurrency or Bitcoin because this channel is about Bitcoin. So let's plot the S&P versus Bitcoin. This one doesn't really say a whole lot because we're plotting Bitcoin on a log scale. And this is, you might be wondering what it says 0.4, well, it's times 10 to the fourth. So let's go ahead and move this to a log scale so we can understand it better. And you can see that from 2010 to 2020, we're plotting, that's the time dimension, the color. So you can see Bitcoin is the x-axis on a log scale, and the S&P is on a linear scale. Now here, we're not seeing that same type of correlation between, that we saw with gold and the S&P. With Bitcoin, I mean, it's really hard to make heads or tails of it because basically Bitcoin has dwarfed what the S&P has done. But you can see that Bitcoin moves up and then it retraces some, and then it moves up and then it retraces, and then it moves up and then it retraces. And during these retracements, you can see here that Bitcoin's retracing. This was when it went up to $1,000 and then came back to around $200. During that time, the S&P was moving up. It wasn't going down. It wasn't staying the same. It was moving up. So when Bitcoin was retracing, the S&P was moving up in this case. And however, I've calculated the correlation coefficients between each Bitcoin retracement and each and what the S&P was doing at the time, and there's really not a consistent correlation between the two. So while for gold, it's fairly obvious, you can really see that when one moves, the other one kind of just doesn't really do a whole lot. Whereas with Bitcoin, there's not really that same level of correlation that you can draw. And I think part of it is Bitcoin is still in a huge price discovery phase because people are really unsure of the effect that cryptocurrency and blockchain technology will have on the world. So it's slightly different, than thinking about it in terms of just physical gold. But moving forward, the question will be is when the markets are fearful over things like coronavirus and whatnot, if it leads to a recession, if something like that were to happen, then how would Bitcoin react? Because we've already seen recently that gold has been gaining steam. It's really seen a nice price increase in the last 6 months or so. And so is Bitcoin for that matter. I mean, well, maybe not the last 6 months, but if you were to go back to say December of 2018 and you saw the price at 3,100 and note that the price of Bitcoin now is 2 to 3 times higher than that, then you could clearly Bitcoin has been doing quite well, but that doesn't necessarily mean that it's correlated with the traditional markets by any means. So that's because there just historically isn't a clear indication that there is a correlation between the two. Now that doesn't mean there's not day-to-day correlations. I mean, if the traditional markets are going down on a day-to-day basis, then there might be some correlations there. But at least on the macro level picture, that correlation it's not exactly clear what the correlation of Bitcoin is. Is it correlated to gold? Is it correlated to traditional markets? I think we're still trying to figure that out. Now, if we were to look at the price of Bitcoin versus gold, it's quite interesting because you can see that as the price of gold is increasing, obviously Bitcoin was increasing. But the reason why this isn't really that informative is because in the last 10 years, Bitcoin is just it's more or less been increasing, except for a few months here and a few months there. So again, it's not really that informative, but you can see that it clearly there's not any obvious correlation with gold because here gold was moving up and so was Bitcoin, But over here, gold was moving down, but Bitcoin was still going up. So I don't think we can say specifically that Bitcoin is emulating gold in the same sense that of it being, say, the place where people go to during a economic catastrophe. So the question, that is on everyone's minds, right, is which narrative will be correct? Is Bitcoin going to be that safe haven, that digital gold that people go to when the markets are down, or are people going to, because a lot of times in an economic crisis, people liquidate their high risk assets. Now, clearly, cryptocurrency is high risk, so there's going to be a battle there between, say, this is a super volatile asset versus this is a store of value, and this is my digital gold as opposed to physical gold. I think I don't necessarily have the answers for that. Only time will tell, but I'm sure there's a lot of people making their bets now as to what they think their response will be. So the reason for this video, again, is just to talk about what would happen in an economic catastrophe or a global recession brought on by anything. And clearly the last few days, we've seen the markets take a downturn, specifically related to the coronavirus, at least the traditional markets. I don't think we can definitively say that Bitcoin recently saw a retracement because of the coronavirus, because we've seen 10% retracements in Bitcoin. I mean, that's just another day. I mean, that's just a Tuesday in the Bitcoin markets. So I don't really think that we can say something like that. I mean, if you just look at the price of Bitcoin just a few months ago, it was like $7,000, and currently it's a couple $1,000s higher than that. So it's really hard to say because Bitcoin has experienced a ton of 10% pullbacks, even on a daily time frame. Like that's really not that unheard of. And so moving forward, what we're going to be looking for is if the economy is doing well, then I would expect Bitcoin to continue going through the cycles that it has historically gone through, albeit with lengthening cycles. If there's a recession, if there's a global recession, that could obviously affect things. I think with the coronavirus specifically, it does look like, at least in China, at least what they're reporting, that the cases are leveling off. So it's just a matter is this information reliable, and can other countries emulate the same thing where they're able to keep the virus contained. So again, I hope you guys enjoy this content. If you like it, please subscribe to the channel, turn the notifications on, and like the video. And if you want to dive in further, then please check out the Telegram channel in the description below. We have around 1,800 members, so go ahead and join that. That'll wrap it up for this video, guys. I will talk to you next time. Bye.